The 80/20th CFO, How to Make Strategic, Value-Adding Contributions to Your Company by Jeroen de Vlaanderen delves into how Chief Financial Officers, CFOs, can maximize their impact by focusing on the most important, high-leverage tasks. The book centers around the idea that 80% of the results typically come from 20% of the effort, commonly known as the Pareto principle. By focusing on the tasks that drive the most value, CFOs can significantly enhance their contributions to the company. Here's a more detailed breakdown. 1. The evolving role of the CFO. The traditional role of CFOs has changed from just focusing on accounting and compliance to becoming strategic business partners. CFOs are expected to provide insights that help shape the company's strategy and decision-making process. In this context, the book urges CFOs to ask themselves, how can I add the most value to the company? Which areas of the business need my focus to drive the best outcomes? The 80/20th approach helps CFOs prioritize activities that will have the highest impact on the company's financial success, allowing them to transition from operational managers to strategic leaders. 1. Strategic financial leadership. A major theme is how CFOs should focus on being strategic. While keeping financial reports accurate is important, de Vlaanderen stresses that the CFO's real value comes from leveraging financial data to guide the company toward better decision-making. The author emphasizes making decisions based on data that highlights where the company is heading, understanding market dynamics and how they impact financial performance, developing strategies that align financial resources with the company's overall objectives. 1. Implementing the 80/20th rule. The 80/20th rule means spending 80% of your time and resources on the 20% of activities that deliver the highest return. For CFOs, this might mean focusing on key financial drivers, identifying the key metrics, e.g., profit margins, return on investment, that have the most significant impact on the company's performance. Automating low-value tasks. Automating routine tasks such as payroll, basic reporting, and data entry, allowing more time for high-impact activities. Prioritizing strategic projects. Rather than managing every single financial aspect of the company, CFOs should focus on larger strategic initiatives such as mergers, acquisitions, and capital allocation decisions. 4. Optimizing operational efficiency. The book provides insights on how CFOs can optimize internal processes by streamlining financial operations. This involves using technology and systems to make routine tasks more efficient, leaving more time for analysis and strategic thinking. Improving forecasting and planning. Accurate forecasting is crucial for making informed business decisions. CFOs should focus on developing better financial models that predict future performance. Driving cost efficiencies. By using the 80/20th principle, CFOs can identify the 20% of costs that consume 80% of resources and work on reducing unnecessary expenses. 1. Creating value through financial insights. De Vlaanderen stresses that CFOs must provide insights that drive company value. To do this, CFOs should use financial analysis to highlight growth opportunities, align financial strategies with business goals, provide forward-looking insights that help the executive team make proactive decisions rather than reactive ones. For example, instead of merely presenting historical financial data, a strategic CFO would use predictive analytics to forecast potential risks and opportunities. 1. Leadership and influence. The CFO needs to be a trusted advisor to both the CEO and other executives. The book emphasizes the importance of effective communication. CFOs must be able to distill complex financial information into actionable insights that non-financial leaders can understand and use. Building relationships. It's essential for CFOs to cultivate relationships with key stakeholders, such as investors, board members, and department heads. Influencing decision-making. By focusing on the key financial drivers and communicating their importance, CFOs can influence the company's strategic direction more effectively. 1. Balancing short-term and long-term goals. CFOs often find themselves balancing short-term financial pressures, e.g., cash flow management, quarterly earnings, with long-term strategic planning, e.g., growth initiatives, R&D investments. The book suggests focusing on financial health today while setting the stage for tomorrow's success. Making decisions that drive long-term value even if they may come at a short-term cost. 1. Real-world examples. The book provides numerous case studies and real-world examples of how successful CFOs have applied the 80-20 rule to create significant value for their companies. For instance, some CFOs have restructured financial processes, which allowed their companies to scale more efficiently, while others focused on strategic partnerships and acquisitions that led to significant growth. 1. Actionable steps for CFOs. DeFlander doesn't just talk theory. He provides concrete steps for CFOs to apply the 80-20 principle in their daily work, such as conducting a time audit, understanding where your time is being spent and whether it aligns with the company's strategic objectives, focusing on value-added activities, shifting time and attention from administrative duties to tasks that enhance profitability, cash flow, and business growth. Developing a strategic plan, mapping out a clear plan that aligns financial resources with long-term business goals. Conclusion. Overall, the 80-20 CFO is a guide for CFOs who want to move beyond operational finance and become strategic leaders in their companies. By focusing on the most impactful activities and applying the 80-20 rule, CFOs can significantly increase their contributions to business success. It's a roadmap for CFOs to optimize their influence, improve business performance, and ultimately drive sustainable growth. This book is particularly relevant for finance leaders who are looking to enhance their strategic value and move from a numbers-driven role to a position of leadership and influence within their organization.